dive in because I make a big, bold statement, right? I'm taking full credit for the 30% pump in Bitcoin and crypto over the last week. Like, well, why would you say that? Well, a week ago, everyone was freaking out, right? SVB, Friday, everyone was freaking out. And I put on the Bitcoin orange pants. I put on my Genesis block socks. And I said, look what it says, right? Chancellor on the brink of second bailout for banks. Bailouts are good for Bitcoin and for crypto. And sure enough. But today, I'm wearing something different. So today, I got the green pants on. It didn't say Patrick Day, but I got the big green candles, and I have the Bitcoin bowl. The Bitcoin bowl socks are on today, along with the green pants. And then I got the Guinness black on top because I will be having a few Guinness later to celebrate.
Cryptocurrencies resumed their rally on Friday, climbing above $26,000 for the second time this week. Bitcoin ended higher by 7.46% at $26,868.39, according to Coinmetrics. It posted a weekly gain of 34.13% and its best week since January 2021, which was right before the first bull run that year. Hello and welcome to Crypto Street. In today's video, Mark Yusko updates about Bitcoin's current market standing, the bull run in crypto, and his outlook for Bitcoin in 2023.
This crisis, and people are calling it a crisis, is very different than the global financial crisis. And there's the core reason for that is the type of assets on the bank balance sheet. So if you think about a bank balance sheet, there's the green, right? So St. Paddy's Day, you got the green side, assets, things that derive value for the bank. Then there are the liabilities, the red. And the liabilities are actually our assets, right? We put our money in a bank and it becomes their money. It's one of the things that people don't really think about. It's no longer your money, it's theirs. And you have an IOU that is money good most of the time, but those liabilities, and in a perfect world, the assets, which are the loans that they make or the investments that they make, accrete value, and the green becomes bigger than the red, and it leaves you with some gold, right? Pot of gold, and the gold is the equity of the bank. And in a normal functioning system, that gold grows as the green expands and people can get access to their deposits.
Bitcoin is highly sensitive to liquidity, and the liquidity outlook has improved, said Desislava Ober, an analyst at crypto data provider Kaiko. Data showed yesterday that the Fed's assets have risen by roughly $300 billion. While the new BTFP facility is not a direct QE, the Fed is essentially injecting liquidity into the banking system, lending more than the collateral pledged is worth in market terms. Investors have welcomed resilient crypto prices amid the banking crisis this week. The week kicked off with the closures of Silicon Valley Bank and Signature Bank late Sunday, but attention was on First Republic Bank throughout the week. Late Thursday, several large U.S. banks stepped in to aid it with $30 billion in deposits. Many have suggested Bitcoin is undergoing a narrative shift during the banking crisis. The cryptocurrency's price moves, however, are still heavily influenced by inflation and Federal Reserve rate hikes.
So if you think about what a bank does, it takes the deposits of everybody, the community puts their deposits in, and then it takes those deposits and makes loans. And those loans could be the form of a mortgage. We've all seen It's a Wonderful Life, where it's about the building loan and building other people's homes. It could be loans to businesses so they can, buy stuff or build products. But it can also be investments in yielding assets like bonds. So if you go back to previous crises, okay, so there was a crisis in 1907 called the Knickerbocker Trust Crisis. How did that happen? What happened there? Well, it's kind of funny. JP Morgan was running the bank, big bank, JP Morgan, and there was this law passed that allowed trusts to compete. And JP was famously quoted as saying, I like a little competition. And unfortunately, Knickerbocker had become big and it was siphoning deposits out of JP Morgan. So he did what any, enterprising bank owner would do. He spread a rumor about Knickerbocker Trust that they didn't have enough assets. And so we've all seen the picture of the bank run. Like if you go to Wikipedia and look up bank run, there's this picture of the men in their suits and ties, and the women in their dresses, and they're all in the umbrellas, and they're running to Knickerbocker Trust. And the bank run happened, and Knickerbocker Trust went out of business. And of course, JP Morgan bought it for pennies on the dollar and became superpower. That was one kind of bank run. Then we had 1987 problem where you had bad people doing bad stuff, like literally stealing money. So that was bad. And if you steal the assets, and if your assets, the green, shrink to smaller than the red, and people then try to take their money out, there's no gold, right? Gold disappears. So Charles Keating and all those guys, they did bad stuff and people went to jail. Then we had the global financial crisis. Well, what was the global financial crisis? Well, the green was not so green. They made loans to, imaginary people and people's third homes and interest-only loans and all kinds of crazy stuff that was never going to get paid back. And so again, the gold disappeared and it had to be a bailout, which is why Bitcoin was born. Right? I mean, the Genesis block is a picture of the Financial Times, chancellor on the brink of the second bailout for banks. And it's important that that day was the birth of Bitcoin, because it's not like it was created that day. It had been worked on during the global financial crisis. It's actually been worked on for 20 years before that, cryptography and trying to solve the double spend problem. But it was critically important that it was on that day, because it was basically saying that when a banking crisis happens, when there's a loss of confidence in a banking system, basically you vaporize the gold, right? You vaporize the value of money at the base layer of the system. And therefore, the currency, the credit, because the only money in the world, Ash, and you and I have talked about this, is gold, right? Money is an asset that exists in the absence of a liability. That's gold for 5,000 years. Now, I'll argue it's Bitcoin for the next 5,000, but let's just say it's gold. And everything else is credit. JP Morgan famously said, gold is money. Everything else is just credit or debt. And so what happens is when you lose confidence, then all of a sudden the value dissipates and you have to devalue the currency.
So what are your thoughts about Mark Yusko's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.